Capital, Sovereignty, and the Dutch East India Company, the House of Orange and the Architecture of Modern Finance. 1. Thesis and Scope. You examine how a chartered corporation and a non-crown dynasty fused markets with statecraft, turning capital into an instrument of empire and leaving legal, financial, and institutional legacies that outlive territorial rule. Footnote. You argue that modern capitalism's core devices, tradable equity, limited liability, and public credit, emerged from a deliberate strategy to project power without a throne. 2. Geopolitical trigger in Iberia. You locate the catalyst in the late 16th century union placing Portugal under Spanish control, which consolidated Atlantic and Asian networks, threatened Dutch survival, and forced an asymmetric response built on private capital rather than dynastic taxation. Footnote. You show that a political merger abroad compelled financial innovation at home to counter a hegemon. 3. Formation and Charter of the VOC. You describe the 1602 amalgamation of regional ventures into a single East India Company with an exclusive Asian trade mandate and quasi-sovereign powers to fortify, wage war, conclude treaties, and administer territories. Footnote. You present the VOC as a corporate sovereign hybrid authorized to externalize state functions. 4. Equity finance, secondary markets, and limited liability. You highlight the first permanent share capital open to public subscription, the creation of a transferable ownership market in Amsterdam, and the legal shield that capped investor loss at Pogene Capital, thereby mobilizing household savings at scale. Footnote. You identified tradability plus liability partitioning as the decisive risk technology that unlocked mass investment. 5. The House of Orange as financial statecraft. You analyze how a stateless dynasty linked its fortunes to merchant finance, acquired formal roles in chartered companies, and converted legitimacy from lineage to balance sheet stewardship in a republic dominated by urban elites. Footnote. You show that dynastic relevance was preserved through capital intermediation rather than feudal tenure. 6. Corporate sovereignty in Asia. You trace the seizure and renaming of Jakarta to Batavia as a command hub, the deployment of armed shipping, garrisons, and fortifications, and the imposition of commercial monopsony across the archipelago to secure spices and shipping lanes. Footnote. You treat Batavia as proof that a company could function as an occupying administration. 7. Labor, logistics, and scale. You note the sustained mobilization of sailors, soldiers, clerks, and craftsmen to operate ports, negotiate treaties, and police warehouses, embedding a million-person labor flow into a private imperial machine. Footnote. You emphasize that organizational scale rested on routinized human movement, not just ships and guns. 8. Diffusion to England, the financial constitution. You connect Dutch practice to England's post-1688 settlement, including public debt issuance and a central bank, embedding markets inside governance and financing warfare through bonds rather than forced exactions. Footnote. You argue that England's durability and great power rivalry drew on Dutch credit technology. 9. New Amsterdam to New York, institutional path dependence. You show that early Dutch commercial law, credit customs, and exchange habits persisted under British rule, seeding a North Atlantic finance nexus that later positioned New York as a market center. Footnote. You attribute metropolitan succession to legal and commercial continuity, not rupture. 10. Amsterdam-London complementarity. You distinguish bank-centric clearing and reliability in Amsterdam from security-centric speculation in London and explain how their coordination produced a transnational regime of bills, bonds, and equities replicated abroad. Footnote. You frame European financial hegemony as a dual-core system rather than a single city's supremacy. 11. Valuation narratives and political economy. You note claims that vote capitalization eclipsed modern firms and even state outputs, underscoring that corporate market value became a geopolitical resource when coupled to monopoly rights and armed enforcement. Footnote. You treat scale not as a curiosity but as a lever that's substituted for dynastic tribute. 12. Violence, atrocity, and coercion. You document massacres, forced labor regimes, expulsions, and punitive expeditions in the Indies that secured price control and labor supply, making clear that financial innovation coexisted with systematic exploitation. Footnote. You center that the corporation's profit model frequently required organized coercion. 13. Decline, nationalization, and afterlives. You trace late 18th century erosion from corruption, military overreach, and competitive pressure, culminating in state takeover. You then follow the institutional afterlife into modern corporate forms, stock markets, and codified investor protections. Footnote. You argue that the company died as a firm while its legal architecture survived in statute and practice. 14. Contemporary Dutch financial power. You assess the Netherlands as a capital exporter with outsized multinational footprints, legal vehicles attractive to global firms, and enduring royal industry ties visible in energy and finance conglomerates. Footnote. You link present competitiveness to long memory in law, governance, and ownership structures. 15. Synthesis and open question. You conclude that markets absorb prerogatives once held by monarchs, recasting sovereignty as contract design, collateral rights, and board control, and you pose the unresolved governance problem of who rules when authority is vested in invisible capital. Footnote. You end by reframing who governs as a question about institutions that command balance sheets rather than armies.